If I want to find my trend line on the way down, on the way up, I will simply go to a line chart. I will then find the last. That's right. Today I'm going to show you how I draw my own trend lines. Now you may draw yours completely differently, and that's fine. But I want to show you a unique way I use trend lines in my own trading when I'm looking for those reversals or those entries. Let's get into this right now. And we're on the pound US dollar on a 4-hour time frame. We're going to identify the market was sideways, and then we had this bearish trend, and now we're making a pullback. So how can we use trend lines here to assist us when we're looking for trades and reversals? Well, firstly, let's look at how we can actually use trend lines. Many people look at using trend lines in two different ways. Let's just draw this out. So let's say we have a bullish trend here. Now, the typical way people will draw out a trend line, they're just going to link those swing points. These swing points here together, and that's your trend line. And you'll be looking for the market to then pull back to that trend line for an entry to go higher. And that's fine, and that's the way most people have been taught to use that trend lines. Now, the way I like to use trend lines is slightly different. If we're looking at this move head to the downside, okay, I would like to use a trend line like this. And this is how I draw my trend line. I'm looking at the close prices, not those wicks. I'm not using the wicks when I'm looking to mark my trend lines. The reason for this is because I see the wicks as those manipulation areas where they're taking that area of liquidity. So let's look at this area on the chart. If you're using a trend line here, you'd be doing a trend line like this. Okay, now the way I'd be using a trend line here is I'd typically be using this. So there's not much difference in it really. But when it comes to seeing a breakout, look at how you can see this breakout to the downside here. Let's go closer into this price. So when we see this breakout here, this is the time we see the breakout to the downside. And then we're looking for a pullback to look for a sell. Now, looking for a sell, typically here, what you can see is we have the market taking this swing high into this area here of supply. Perfect. That's fine. You can take that trade. No reason you can't take that trade. But we do have this breakout here, and we pull back into this supply and an area of imbalance here in the market where you could have taken your first opportunity for an entry. And the market drops away. Now, to this low, we've got nearly a 5-to-1 risk to reward. I'm not saying you're going to capture all of that, but even to this low here in the market, you've got over 3-to-1 risk to reward, and you've missed that opportunity using the trend line here, not the one of closed prices. That is the way I look at my trend lines. And the same way is when we see this move down here in the market, I know that the retracement is coming as soon as I see this candlestick here close. Hey traders, we'll get back to the video in just a moment, but I want to give you a gift for hanging out with me today. I want to give you a free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything that you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate you more profits and the steps to building a profitable strategy for yourself. You don't have to spend a lot of time on this. It's about doing the right things in the right order, and it's free as my gift to you. So just go to norfolkfxtrader.system.io free strategy class sign up, or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video. Now sometimes drawing the trend lines off those wicks is going to give you the same outcome. As you can see here, off the wick is exactly the same, but other times you're going to find it's going to be different. The same here. If you're using a wick, there's your wick. Okay, the market breaks out on that candlestick. And if we're using the way I draw my trend lines, you can see it's exactly the same point. We see the breakout. That's what I'm trying to say. Sometimes it's going to be exactly the same. If we continue to go down here, we know this is a breakout point, and we can start to draw out a trend line as we go down. So we have a trend line here. We would have another trend line we could draw here. So at that point, we can see we have a breakout here, which we know is a retracement, potentially coming back for an entry out of this area here. And what is this? This is actually coming off this base drop area, leaving an area of imbalance. We pull back into this area of supply, fill that imbalance, and continuation down. So we can use trend lines to identify those pullbacks. When we're looking for the market to pull back into our area, we're looking for an entry. We know the market is now bearish, so we're only looking for those sells. And once we see the trend line breaking like this, to downside again, and again, if you used to use a trend line here, you would have got this same, candle breaking up. So there isn't a lot of difference. Only occasionally you're going to find it works better. I just want to show you how I use trend lines. Because at the end of the day, this is what the channel is all about, is how I'm trading, not about what everybody else is trading. You want to see what I'm trading, and that is how I'm using my trend lines. Again, we can follow this movement down. We have another trend line here. Now, where's that now coming to? Well, we can mark trend lines out. As I say, they're very subjective. You have another trend line here you can mark. Now, we broke out right there. And we could have another trend line I could mark here. And we broke out there. So using trend lines, you can draw them in so many different ways. So what is the easiest, the best way for you to look at drawing a trend line? Let's now remove all of this. If I want to find my trend line on the way down, on the way up, I will simply go to a line chart. I will then find the last swing high and the swing high above, and I'll mark that out as my trend line. I will use that as my breakout area and my retest area. So you can see that the market here, we broke out here, pulled back to this low, perhaps manipulation, area of demand, and a good buy. Now after that, we can see this was a swing point that I can mark. Now since then, I can now mark this same swing point to the next one, which is here. So what are we seeing right now? Let's go closer in. We can identify using the line chart. These are the major swing points. So once I know we get a close through this high, which we've now got, I know price is going to want to gravitate to this area. Now, we can mark out this low here because I know here there's going to be an area of supply, an area of imbalance, which is where I want to see price now head up to for a sell. This swing high has been removed. It means this area of supply did not hold, but it does mean we're going to leave an area here of demand. And you can see we've got areas of demand here, which probably price has bounced off. We have another area of demand here. Now, price is breaking through this trend line at the moment, but if we now just put price back on, we can see we've just closed through that trend line. So if I see this happening, I want to see price pull back now to an area of demand to a swing low. So we have a few areas here that we've got marked out. Area of demand. So this is a rally, base rally, potential new basing, and another rally. Now, again, you can see where I've got this level marked. Okay, it comes into an area of imbalance and an area here of supply. So that is a great area to look to target. So based on this information, I'll be looking for a pullback. Now, we can either see a pullback to this area and continuation. Now, for me, because we broke this high, it's a nice breakout. If we're now breaking through this trend line I've got drawn, I'd rather see price, get my arrow, come all the way back to this trend line at the same time, okay, into an area here of imbalance. Okay, that is what I would like to see because I now have a confluence. I have my trend line, my area of imbalance, and I also have a swing low that the market's going to want to take. So the move down here and then another buy from here is going to give me a higher chance, a higher probability, and a much higher risk to reward. And that's what I'd be looking for, and it's how I use those trend lines to determine when I see that breakout. Now, if we get a bullish candle straight back up and we break this high, then potentially the trend line will continue like so. But we have to just go off what we're seeing right now. And right now, potential break to the downside. Now, I'm not selling here. Why? Because I'm still expecting the price to continue higher because we took this swing high. I'm looking for that pullback. Now, understanding that the market just done this, we want to be below the 0 point. This is our discount area. Okay, so if we're marking fall back into this area, this is a better zone for us to trade out of. And look where it all comes and lines up with. It lines up with the trend line, it lines up with the area of balance, and taking the swing low. And that's how you can put a trade into your favor. Don't go out there just taking every single trade you see. If the market doesn't pull back here and we continue higher, so be it. Okay, we leave it, we let it go. If you want to be in the top 5% of traders and you want to succeed, then this is what you need to do. You need to sit back and wait for the trade to come to you. And only then do you decide if you're going to take that trade. That's how I look at using trend lines. That's how I use trend lines. Nobody else, how I personally look at them, is how I use them. Now we could go to a higher time frame, like a weekly. So now we're on the weekly time frame. Let's see how we can use the trend lines the same way. Now we can see straight away here we have this push up, and that's where we have a nice breakout to the downside. Pullback, continuation. Now once I've seen this candle breaking out, I know the market's going to want to take this low here in the market. We see the market goes to it. In fact, if we just double check with the line chart, yep, that is correct. We can then see, and like I say, I want to use the last two swing points. Okay, that's what I'm looking for. And this is the breakout. That's going to be where I know the market's going to want to go. We go through, break through. Now, the reason we continue lower here is into this area of imbalance, right, where we can now see that beautiful pin bar with a reversal potentially to go higher. Now, we can also look at a trend line from this high, okay, to these swing points. Now it's probably better to look at a lower time frame here, but we can see we're now breaking that trend line, showing that a retracement potentially is coming, but we need to see this weekly candle closing up. Now this is not the best looking trend line, so what I'll do, I'll go down to a daily, look at the same area on a daily, and then we just go to line chart, look for the previous. We have a swing high here and here, which would be the major swing high, and then we have kind of like this move down here that I'll be looking at from this high to this high. There's your breakout. So we can go to price and you can see, let's have a look closer. We can see we break out, kind of like start to break out on that blue candle, and then we break out fully with this candle. We have a pullback, push below the low into the area of imbalance left over here, and a continuation up. Now the market's heading up towards potentially right now this area of imbalance, and we have an area of imbalance and an area of supply sitting here. But we can see the move up after we broke this trend line. We have an idea where the market's going to go to that next trend line with a confluence. We're not using trend lines on its own, we're using it with other things, with imbalances, supply and demand, and everything else with liquidity. So right now we're coming into this area of imbalance on a daily, on the 4-hour time frame. That's why we're witnessing this trend line that's been broken to the downside potentially there for a pullback, because we're coming out of that area of imbalance. I'm not saying that the market's going to fall away from here fully, because we're still looking for that pullback on a daily deeper, perhaps going to that area on the trend line. And that's how you can start using those trend lines to quickly identify where the market's likely to be going. Once you see that breakout, we know we're going to go for a swing low. Okay, looking for the areas of imbalance. Now, if you're not sure about the use of imbalances, there is many videos in the channel. I will also leave a video at the end of this video, which goes through a series of videos on imbalances to help you to understand how I use imbalances in my trading. As I said, this video has been all about how I use trend lines in my trading. And I do hope it's giving you some insights on how I actually mark my trend lines and how you too can potentially use them the same way. Now, the reason I mark them from the use of the line chart instead of the use of the wicks is, like I said, I see those wicks as manipulation. That's where I'm seeing the wicks taking out previous areas for liquidity. Now, liquidity is a completely different thing altogether. Let me just briefly show you what I mean. When we're looking at these wicks pushing through, they're taking previous lows. You can see here taking lows into areas of imbalances. So if we was to look at me just show you here. We have this move through. Okay, that wick is pushing through this trend line. Okay, and then dropping off. So where we come to the next time, we see a breakthrough. It's not a great example there. Let's look at another one. Then we mark off from here. Right, so that's a good example. So you see the market comes back to the trend line. There's your wick, wicking through. That's the manipulation phase. And all that is actually doing is wicking into this area of imbalance. So just wicking through the top of this imbalance into this area of supply before the move goes down. And that's how you can capture those sort of trades, understanding that the wicks are actually the manipulation phase where liquidity will be taken. And this time we were filling an area of imbalance into an area of supply. Now we can also just see a wick through a trend line for a continuation as well, where we take out that area. So I hope you've enjoyed what you've learned here today. And if you want to see more content like this, where we go through exactly how I trade, the things I use, and how I apply them, then leave a comment below. Let me know that's what you're interested in. But also, if you're interested right now in getting access to the 10x growth trading strategy class, which you can go and click the link above now.